Section 10. 34 is your "Can I sign this return" rule. You cannot willfully sign a return or refund claim if you know, or reasonably should know, the position lacks a reasonable basis. You also can't sign if it's an unreasonable position under Section 6694A, 2, or if it reflects a willful attempt to understate tax or reckless or intentional disregard of rules. On the EA exam, they test the wording "know" or "should know." Now sort support levels from strongest to weakest. More likely than not means over 50% chance you win if challenged. Substantial authority is less than that, but still a strong, well-supported position when you weigh authorities on both sides. Reasonable basis is the floor for return positions, higher than not frivolous and not satisfied by something that's merely arguable. Exam tip: reasonable basis is not the same as "I can make an argument." Here's the disclosure twist they love testing. For penalty avoidance under Section 6694, a reasonable basis position generally needs disclosure on the return, so the IRS is alerted to the issue. That's where Form 8275 comes in, disclosure statement. It's used to disclose positions that don't rise to substantial authority but still have reasonable basis, assuming the issue isn't already disclosed elsewhere on the return. But disclosure is not a magic shield for nonsense. So what's an unreasonable position? In general, it's an undisclosed position with no substantial authority. That's the classic setup for preparer penalties under Section 6694A. Contrast that with a reasonable basis. You might be allowed to take it, but you typically need to disclose it to avoid penalties. If you see no substantial authority plus no disclosure, your exam brain should immediately think unreasonable position. Frivolous is the cliff. A frivolous position is patently improper with no reasonable basis, basically bad faith tax protester stuff. And Section 1034 is blunt. You must not knowingly sign a frivolous return. Disclosure doesn't help you here. If the position is frivolous, you're done. No signing, no. But we attached a statement. No client insisted. The exam will often give you sovereign citizen language to flag it instantly. Think about the classic example. Wages reported, tax paid, then an amended return shows zero income and asks for a full refund because taxes are voluntary or sovereign citizen. That's frivolous. If the preparer signs to add legitimacy, the IRS can penalize both the taxpayer and the preparer. The big takeaway: Section 10.34 isn't only about technical support levels, it's also about your duty to refuse bad faith filings. Finally, tie it to preparer exposure. When you see reckless or intentional disregard or a willful attempt to understate, you're in the harsher penalty world under Section 6694B. That's separate from the support level discussion. On the EA exam, they'll describe the conduct: reckless, intentional, willful, and ask for the penalty structure. So don't just classify the position, classify the preparer's behavior. Bianca is an enrolled agent who gets audited after a misconduct report. The examiner finds she understated tax on several returns due to reckless misconduct and willfully ignoring the law. What's the potential penalty under IRC Section 6694B? The choices include different mixes of a $5,000 amount and a percentage of the income she earned from the return. Think about it. The correct answer is the greater of $5,000 or 75% of the income derived for each return or claim for refund. That's the Section 6694B, penalty for willful understatement or reckless or intentional disregard. A tempting wrong choice is the one that says 100% of the income, because it sounds harsher, but the statute's percentage here is 75%, not 100%. Priya prepares returns, but doesn't keep copies of the returns she prepared, and she doesn't keep a client list. She deletes and shreds everything after tax season, although she does print a copy for each client. For the 2023 tax year, what penalty does she face for failing to retain a copy of the returns she prepared? Options range from no penalty to a per failure dollar amount. Think about it. The correct answer is $60 per failure. Giving the client a copy doesn't replace the preparer's own retention requirement, so no penalty is the trap. On the EA exam, watch for questions that test record-keeping duties separately from what the client received.